White Wave Trading Strategies. This is Tuesday night, the 18th, or the 17th. This is for Wednesday, the 18th. Tomorrow's a Fed day. So we're going to take a look at the S&Ps here. Last night, we reviewed the fact that I did not like this chart pattern and didn't believe it. We came back up in a resistance and rolled over in London and kept on going all day. The low again was 2038.5, right back down into the yearly pivot. So this is going to be a big area to hold tomorrow. And whether we hold it or not, you might not know until the minutes come out at 1 o'clock in the afternoon. But what I do know is if we start sustaining under this level, I want to take you over to this point and figure for a second so you can see these areas. The first area down on the, we start getting through the 30s. The first area to flush is probably down closer to 207 on the point and figure, somewhere in there, give or take a couple of handles. The main levels under that are 1984 and 1965. These are levels that aren't going to change. So they'll go from one level to the next, and you'll see bounces off of every single one of these. Let's take a look at the Nasdaq. The Nasdaq, again, 2 days in a row, went right up into its 200-day moving average. Right into the resistance zone and turned around and rolled over. Now, the important thing here is that Nasdaq's in a downtrend. This is the midweek shuffle, and you're looking for Wednesday, Thursday highs in the equity indices to sell, failed rallies, and to see if they're going to roll over. So this has been in a downtrend. If it's going to go into an uptrend, it would have to come down probably like 42.65 and start to rebound tomorrow to think that there's any hope of this changing direction. In the meantime, I think you just stay in seller rally mode. The gold is going to be a tough call, but this is something I think is going to probably resolve itself to the upside tomorrow and finally break out. And you're not going to know this until probably the Fed minutes at 1 o'clock. But I'd be looking to buy any hard break in this tomorrow. I don't know if we can get back down to 1272 again. If it did, I'd take a shot down there. Right now, I don't think it can really get back below 1278. So again, this is going to be off the equity indices, and we'll just have to see how it trades. The bonds are another trade. Yesterday, I didn't believe this reversal pattern, and they took them up again today. Beeks obviously got the information on CPI early today because the short end of the curve was completely offered before the news release. Then the 30-year followed to the downside and turned around and came right back up, made new highs. So again, this is neutral on my work. Whether we can come back down and attempt a print in the 164 handle tomorrow remains to be seen. But if the S&P start down, I'm not going to be short the bonds. Now this is one troubling pattern, and this is Amazon. This is clearly run out of steam up here, and there's been profit taking. Now the question is, is this is this the start of something bigger, or is this just a move back in to fill the gap and do some sideways action for a couple of days? And right now, I don't know the answer to it, but I would keep an eye on this tomorrow, because right now, you need a bounce off 687.30 and a hard bounce, and then it needs to resolve itself back up for this to put in some sort of a low here and come back up into the end of the week. Otherwise, I think this is going to be under pressure for a much bigger correction. Google's got another troubling pattern. Outside reversal day, closed below the 200 day. So this is going to be the same thing. I want to watch these big tech names. I mean, they're under pressure. And if we start seeing profit taking in these tomorrow after 1 o'clock, it's going to be an ugly afternoon for the bulls. Crude is getting a little pricey up here for me. I was looking at July, a July print at 49.40 for this next target up, and it just came shy of it by 17 cents. So you want to be careful. And the other thing you have to know is that the Junes come off the board on Friday. There's an oil expiration. So that changes the dynamic of how oil trades. And typically we've stayed firm into the oil expirations and then broke. But, I'm not sure what we're going to do on this one. We're a long way away from the moving averages, and there's no saying that if the S&Ps and Nasdaq don't go risk off, that we can't see some profit taking in the oil as well. The currencies, I'm staying away from. I don't even want to look at them. Aussie had a nice bounce off of its 200 day, really didn't get anywhere in the upside. Now it's coming back down again. So to me, this is just one more, it's just not trading well. And if the equity indices are going to be risk off tomorrow, then I don't see any hope for the Aussie holding up much either. So that's all I have for tonight. We'll do some more work in the morning. And we'll see what we see. Now, a couple of trades that I've been trading the wheat, and I think this has been one of the better trades on the board because it has nothing to do with interest rates right now, and it's not trading with the S&Ps. The wheat's trading its own market. The grains are a weather market. The commodities have been bid from whether it's lumber, which is getting a little pricey, a lot of different things. So I need a couple of closes over this 487 level in wheat to extend and start another leg up. And I want to buy any break back towards the 21-day moving average, which is around 477, 478. So I want to keep buying, looking at this as buying weakness on the 2-day breaks, and we might not get it. The beans came down. Try to get back towards 1050. Let me put a candle up so you get a better look. You had this doji in here. It held. It's going back up. It's not that overbought. So I'd look for the beans to stay in their own world. And the corn's kind of stalling out up here just around $4, and we'll see what that does. Let me see if I can pull this lumber up, because I was going to send something out on this today, and it's stalling out up here, but I want to give you a different look. Okay, hold on. We have to get an active daily continuation up. It's getting very close to the 618 fib coming back for the last 3 years. So this is a pretty big Fibonacci level, and it's also the top of the cloud. So this is where the lumber can run out of steam. And this is where I'd look for it to run out of steam. Here's the quarterly look. It's got to do a lot of work, to get across this level. So that's all I have for you tonight, and we'll be back at it in the morning. Good luck and good trading.